It's hard to believe that ChatGPT has only been around for 19 months. And in recent announcements from OpenAI and Google, chatbots are moving way beyond simple tricks of summarizing and simply analyzing documents. They can now provide translations in real time.
How do we solve linear equations?
Potrebbero chiederci come risolviamo le equazioni lineari.
Sicuramente sì.
Certainly, yes.
Great.
Or better yet, they could review information on a whiteboard and give you suggested improvements.
What can I add here to make this system faster?
Adding a cache between the server and database could improve speed.
This is merely the beginning of where AI is heading, and most every company will need to rely on more computing power in order to fuel their AI infrastructure. And to be competitive, these companies will be investing heavily in both hardware and software services. And this makes for the perfect opportunity for investors like us to also gain from this massive shift in resources. Now, I've spoken to it many times where the expected compounded annual growth rate for AI is to be over 36% a year for the next decade. Now, depending on what you have invested or plan to invest, that level of growth could generate a lot of millionaires over the next 10 years. And I genuinely hope that that's the case for many of you. Each month, I try to give my top 5 stocks that I'm investing in more heavily at that time. So in today's video, I'll review the details of each of these companies and what it is that I like about them. And please keep in mind that stocks will always go up and down, where the short-term view is always a bit cloudy at best. For me personally, my investment strategy is to combine high growth over the long term, where I am very patient with my investments to see them play out. Every single time that I've taken a knee-jerk reaction with my investments, somehow it always seems to bite me on the backside. Let's go ahead and get started with the first company of Micron Technology. Now, I realized that I had this on my list about 2 months ago, and I received a fair amount of pushback on it, but it is still very high on my list due solely to the high bandwidth memory chips, which really help power the new nvidia H200 GPUs. This high bandwidth memory business is expected to account for 61% of the overall memory market in 2028, and that's compared to it being only 5% this year. These HBM3E memory chips from Micron are claimed to use 30% less power than the competing memory options, which improves performance and it reduces data center costs. In fact, they've already sold out their entire 2024 capacity of high bandwidth memory. Granted, their relationship with nvidia is key to their growth, but nvidia is also working with Samsung and Hynix for the same type of product. But the area that sets Micron apart from its competition is the 30% reduction in power consumption. In addition to the HBM, other forms of memory used in phones and PCs, well, they're expected to grow anywhere from 60 to 80% due to the heavy requirements of using AI on these type of edge devices. And I want to point out that Micron had a very soft year for earnings in 2023 due to their slump in demand on their consumer memory, where they had a negative earnings per share, which was an outlier from their prior 5 years. So if Micron has high demand for both its HBM and its consumer memory both at the same time, then a major increase in earnings per share should play out favorably to us investors. To give you some idea on its recent performance, it is up over 58% year to date and over 100% over the past year. And a key reason why I'm so heavily focused on semiconductors right now is because when you look at the life cycle of mobile internet, it started off heavy with hardware in the gold color, and it grew for several years. Where I expect the same to hold true for AI because it will have a huge demand for commercial hardware, and then it's going to expand into the consumer's edge electronics over time, and then it's going to move more broadly into software and services. And I keep bringing up this life cycle graph because it is the roadmap for investing with regards to AI. So long as we pick companies with strong fundamentals, the growth engine is going to push its performance in our favor. When exploring new markets, it's crucial to have some form of diversification by including established markets and asset classes. One overlooked option is the art and collectibles market. The sector is experiencing significant growth, with Deloitte estimating it will reach nearly $2.9 trillion by 2026. And Bloomberg reports an increasing number of investors entering this space. That's where today's sponsor, Masterworks, offers a platform for art investing, allowing investors to diversify into blue-chip contemporary art by purchasing shares without requiring millions or art expertise. They've successfully exited 23 paintings, including works by Banksy, Biscott, and Warhol, distributing over $60 million in investor proceeds. A recent $8 million Biscott sale highlights their success. With nearly $1 billion in invested capital, Masterworks offers a unique opportunity for diversification. Be aware that some offerings may sell out quickly. Priority access is available through the QR code on the screen or in the link down below. It's important to note that past performance doesn't guarantee future results, and all investing involves risk. Potential investors should review Regulation A disclosures below. Now, this next company is one that I highlighted last year, and that is Aerovironment, where they design, develop, produce, and support multi-range robotic systems and software. This is in the form of unmanned aircraft systems, unmanned ground vehicles, and missile systems. They happen to be the company that worked with NASA in creating the Ingenuity Mars helicopter, which is the first aircraft to fly on a celestial body, and it maintained operations there for over 2 years. It's obvious that this company is tied in very closely with government agencies, and they are in very high demand for the reconnaissance aircraft that exist both on the air and the ground. This is the future of where a lot of military spending will be going, which I believe we've all learned from recent conflicts. But as I mentioned, they also worked with NASA with Ingenuity, and they also developed a high-altitude platform station that acts like a high-altitude pseudo-satellite, where they happen to set the world altitude record for sustained level flight. This can be used for broadband telecommunications wherever it's needed, and it can supplement satellites as a backup in case we have any satellite failure. And when we look at their quarterly health, they are showing huge growth year over year, and that's with a healthy margin of over 35%. And as we've seen in recent conflicts, drones and autonomous vehicles will be a major part of military spending. And Aerovironment is at the beginning with those relationships, and their AI software systems have been heavily integrated with existing government systems. Once that happens, it's pretty tough to lose your position. And when we look at their performance year to date, they are crushing it at over 75%, and their 1, 3, and 5-year compounded annual growth, well, it's quite good, and it's nearly twice that of the S&P 500 over each time frame. The market cap is only $3.4 billion for Aerovironment, and they're just now starting to pick up in momentum. And that's why I had highlighted them last year, and I still see them as high potential this year. The next company should come as no surprise, since it happens to be the top dog in semiconductors, and that is Taiwan Semiconductor Manufacturing, where they easily make up the largest share of semiconductor production at over 59%. In addition, they also have the highest margin rate among all of its competitors at over 52%. And as wild as that may sound, the CEO of TSMC recently announced that they would be raising their costs to nvidia. Now, they haven't announced how much they're going to raise it, but with nvidia only making up 6.3% of their overall revenue, it shouldn't push their stock up too much. However, with Apple making up the majority at 23%, and given Apple's most recent AI update, they plan to push AI into every single device moving forward. And they want to use the most high-tech chips that are available at the smallest scale, at the 2 nanometer node. And when we look at the current technology of the TSMC chips, the majority are between 7 and 3 nanometers, where everyone is going to want that upcoming 2 nanometer scale. Which, when we look at the expansion plans for TSMC, they have 2 nanometer plants coming live in 2025 inside of Taiwan. This is a great chart showcasing all the plants that are coming live, where in the United States we have gold, Japan is in the blue, Taiwan is in green, and Germany is in purple, and that hasn't even broken ground yet, that at least I'm aware of. Most every major player that's growing with AI hardware are working directly with TSMC, so it is no surprise that this company is going to have massive growth for many years, which is wild when you look at their performance year to date at over 69%, and they have one of the highest 5-year CAGRs at over 34%. For me and my portfolio, I am constantly buying into TSMC whenever there's a dip, because I know that many of the top AI companies, well, they have to buy directly from them. And they also have a lot of capacity that happens to be opening up within their new plants over the next 8 years. The next company is Qualcomm, which I see as being part of the middle phase of growth within the AI growth lifecycle, because the chips from Qualcomm are associated more with edge computing, where they are a leader with their Snapdragon processors that are in Android phones, tablets, and mobile devices. They also produce the 5G modem chips used in the iPhone and other electronics. In addition, they have a large market in low-power chips used in Internet of Things devices and also in automotive infotainment systems. The reason these edge computing chips are important is because sooner or later, AI is going to be shifting away from just being in mainframes and server rooms. Because then it's going to start moving out into the individual user devices, which will require a major overhaul and upgrade in those electronics to take on that additional workload. Natural language processing and autonomous functions in the edge computing world, they're going to lean heavily onto both Qualcomm and companies like Micron because they simply go hand in hand. In looking at the performance, Qualcomm is up over 50% year to date, over 100% for the year, and over 27% CAGR over 5 years. This near-term growth is incredible to see, and the revenue for Qualcomm will begin to heavily ramp up over the next 1 to 3 years. And that'll happen once the hardware requirements for implementing AI on our mobile devices truly begins to take off. Now, if you're new to the channel, I do have a spreadsheet of all of these companies and more that are specific to AI down in the description below, and I have them there in case you want to research them further on your own. So far, I've talked about Qualcomm that designs chips for edge computing. And then there's Taiwan Semiconductor, which is the foundry for fabricating the chips for many of these different companies. And then we have Micron, that is also a foundry, but they're specific only to memory. And they work in conjunction with the GPUs from both TSMC and nvidia. And then there was Aerovironment, which creates unmanned vehicles, and they utilize technology really from all the companies that I've spoken to. And now the last company is sort of the monopoly that they all rely on, and that's ASML Holding. And they happen to be a company that's out of the Netherlands that's been around for nearly 40 years, where they are the dominant supplier of lithography equipment to semiconductor manufacturers, with a near monopoly in extreme ultraviolet lithography systems critical for producing the most advanced chips at the 7nm and below process nodes. Literally, all of the foundries like TSMC, Samsung, Intel, Micron, and Hynix all rely on their lithography systems, which are the most advanced in creating chips with smaller transistors, higher density, and greater performance. I mentioned earlier how TSMC is building several new plants. Well, so is Intel, Samsung, Micron, and Hynix, just to keep up with that overwhelming demand. And that means that ASML is at the very beginning of the AI growth cycle up until Moore's Law forces us to find a completely different way to approach this. And in looking at the performance, ASML is up 49% year to date, and the 1 and 3 year are quite good, but the 5-year CAGR at 41% is absolutely incredible. And as we've discussed, there are a lot of new foundries that are being built, and quite honestly, they're not going to get very far without ASML and their lithography equipment. The first 2nm foundries should become operational in 2025, and I believe that many of the older foundries, well, they're going to probably need to be retrofitted with newer equipment on a regular cadence just to keep up with the existing demand, which will play directly into the hands of ASML. Let me know in the comments of any companies that you'd like me to review in upcoming videos. I love knowing what is at the top of everyone's watch list, and I am more than willing to dive deeper for a review. Thanks so much for watching.